Hello, this is question and answer session from the webinar organized by Mortgage Direct, our partner, the broker company who we recommend to our clients who are interested in getting a mortgage in Spain.
Our first question is from Tala, Liam and Wojtek. How will the property market and prices be affected by this pandemic? And Kevin, if you'd like to answer that, please.
First and foremost, good evening, everybody, or good morning. You might be outside of Europe. In terms of this question from Tala, Liam and Wojtek, how will the property market and prices be affected by this pandemic? Speaking from our own experience of previous crises, we feel that the negative effect might actually be quite short-lived. In terms of our own inquiries, we did see a sharp drop in the first week of the state of alarm here in Spain. But since then, inquiry levels have risen up to around 2/3 of the normal levels, as clients at home obviously assess the likely outcomes. Very soon, real estate agents here in Spain will be able to show properties in person to their clients, which we believe that will give a big boost to the property market. And we mustn't forget that locals actually account for a large number of the property buyers in Spain. In terms of the banks, unlike during the global financial crisis, this time round they do have money to lend, which is crucial for helping keep the property market going. And finally, commercial flights. We believe that once they do start in the coming months, that will give another boost, a very critical boost to the property market here in Spain.
Okay, thank you, Kevin. And a question from Caroline and Malvin, similar questions. Do you expect that the deposit requirements and or affordability rules will change over the coming year as a result of the pandemic? Bożena, if you'd like to answer that, please.
Hello, Carol and Malvin. Good question. The lending criteria are very much dictated by the risk the banks are willing to take. So if you look at the current situation, it's very unlikely that the banks will ease off on the criteria in a short period of time. Saying that, if the banks depends on the business coming from mortgages, if your profile is very good, the banks are always willing to negotiate the terms and the interest rates.
Okay, thank you, Bożena. And a question from Andre. Good evening, Andre. Will mortgage lending increase from the current 80% to at least a 90% figure following the COVID-19 lockdown? Bożena, if you'd like to answer that, please.
Hello, Andre. First of all, I'm assuming you are a fiscal resident in Spain. A fiscal resident, you're paying taxes here, because 80% is only available for Spanish residents. The same answer applies to my answer before. Very unlikely the lending criteria, the loan to value will change anytime soon. Saying that, there is an interesting product. It's a new product on the market where you can get a mortgage on the property, but also you can get a percentage of the renovation cost.
Okay, thank you, Bożena. And a question from Yolanda and Nico. We haven't signed yet and want to continue with the mortgage and purchase. How does it look like to us? Kevin, please.
Well, to be honest with you, Yolanda and Nico, it looks very good. During the lockdown period, we were pleasantly surprised that virtually immediately the banks contacted us and said, we are open for business. And clients that had already signed their contracts to purchase the properties, they've all been able to complete, or they're waiting to complete, but nothing has stopped the actual process from going on. What we do know is that notary offices are open. Lawyers are willing to attend the notary office to do these signings. If they aren't, we have known that some of our clients have actually reappointed another lawyer. Once the lockdown measures are lifted, which is happening already, obviously that will make it even easier.
Okay, great. Thank you, Kevin. We've got a question from Philip and Pierce, which very good question. What has happened to valuations, including new builds, and what impact, if any, is this having on mortgage borrowing? And Kevin, if you'd like to answer that, please.
Well, again, speaking from our own experience, all the valuations that we've had to instruct for our clients have been coming in either at the price or slightly above. We do actually instruct valuations directly with the valuation companies, and we do find that we have better results, more reliable valuers working for those companies due to the experience we've had. Over the years, we've realised that certain valuation companies are more efficient, their valuers are more experienced. So currently, we haven't really noticed that we've had any low valuations.
Okay, thank you. And a question from Pat. What if travel restrictions prohibit travel to Spain for finalising a purchase off plan that is to be completed in 2021? What if the appraisal or valuation comes in significantly lower for homes purchased off plan before the health crisis? Kevin, is that sort of ties in with the last question? If you'd like to answer that, please.
So if you had signed to buy an off-plan property prior to the coronavirus outbreak, obviously, and if it's going to complete in 2021, you have plenty of time to sort out a power of attorney with a lawyer, and that lawyer would be able to come to Spain, would be in Spain and be able to do the purchase on your behalf. But in all honesty, we really believe that international flights will commence again before next year. In terms of the valuation question, if the valuation of the property comes in under the price that you've agreed to pay, there's various things that you could do. You can speak to your lawyer and see if they can negotiate a lower price with the developer, or you might even approach the bank again. Sometimes when we have low valuations, we're able to go back to the bank. For example, if a bank had agreed to a 60% mortgage, it might be that given the circumstances with the coronavirus, they'd be willing to increase the amount so that it went to 70%, which could help negate the issue with the low valuation.
Okay, great, thank you. And a question from John. Good evening, John. What is the timeline from application to decision? Bożena, if you'd like to answer that, please.
Hello, John. That very much depends on which bank we approach and also how organized you are. On average, it takes my clients about 2 weeks to collect all the documents and complete the mortgage application. I then need about 2 to 3 days to organize the case and write the report covering letter, so the case is easy to understand for underwriters and we get quicker approval. The banks usually takes, depending again on the bank, the banks take between 2 weeks up to 1 month to give us a decision. So again, the sooner you start the process, the better.
Okay, thank you, Bożena. And a question for Michael. Do you need to open a bank account? Bożena?
Michael, absolutely. There's 2 benefits. One, you're starting the relationship with the bank. So in the future, if you have any problems with direct debits or some transactions, you know who you're speaking to. You've got your dedicated manager and you can resolve the issue. Secondly, if your income is not in euros and you rely on the exchange rate, you know the cost of buying in Spain becomes cheaper when you transfer money across at the right time. So by having the bank account in Spain, you can monitor the exchange rates, transfer money across when the exchange rate is good, and save yourself a fortune.
Okay, thank you, Bożena. And a question from Anton. How do I get the cheapest mortgage in Spain? Bożena, if you'd like to answer that, please.
Hi, Anton. This is one of the questions that make me smile. It's a good question. First of all, if you remember from my presentation, we looked at debt to income ratio. So make sure, if you can, make your debt to income ratio as attractive as possible. Because the lower the debt to income, the bigger choice of banks and the better terms and conditions we can achieve. Secondly, I'm afraid I'm going to say employ the mortgage broker, because we have access to all of the banks and we can find that rate. Very often banks advertise interest rates on the websites that are only applicable to Spanish fiscal residents, which is very confusing for foreign buyers.
Okay, thank you, Bożena. And for some more specific questions now, we've got 6 more questions to go, and then we'll go on to the interactive session. A question from Graham. Good evening, Graham. What is the mortgage availability for non-resident retired people buying a second home? Bożena, if you'd like to answer that.
Hello, Graham. Good question. If everything depends on, again, we're going back to debt to income ratio. As long as your pensionable income and your current expenditure fits the criteria and the mortgage is repaid by age of 75, there should not be a problem.
Okay, thank you. And a similar question from Kirill Kenny. Can a retired American citizen get a mortgage in Spain? Bożena, if you'd like to answer that.
Absolutely, the same rules apply. So the mortgage have to be repaid by the end of age of 75. You need to meet the criteria of the debt to income ratio. We deal with all the nationalities. The banks are happy to lend money to all the nationalities as long as you fit the lending criteria.
Okay, great, thank you. And a question from Elvis. What is the situation buying on the islands? And I presume by that you mean, Elvis, the Balearics and the Canary Islands. Kevin, I know you do a lot of mortgages in the Balearics, so perhaps you'd like to answer that.
No problem. Well, the situation on buying in the Balearics or in the Canary Islands is the same as anywhere else in Spain. The only thing that I've read that might be slightly different is regarding travel. So the recommencement of international flights to the islands. So it's quite well written in the press that the level of coronavirus infections on the Balearic Islands and the Canary Islands is actually lower than other parts of Spain. And the government have said that the lockdown measures will be eased more quickly in those areas. I've also read that I think the German government is lobbying for international flights between Germany and the islands to start perhaps before other commercial flights. But in terms of just the general process for buying and getting a mortgage, there's no difference between the islands and the rest of Spain.
Okay, great. Thank you, Kevin. And a question from Philippe. Should you apply as a couple if your partner has no credit history or is currently unemployed? Good question. Bożena?
Thank you, Philippe. The banks would like to see joint applications, regardless whether your partner is employed or not, whether they have a credit history. They view joint applications at lower risk because the chances are that during the term of the mortgage, your partner will find employment. And those cases are usually approved quicker and we get a good rate.
Okay, great. Thank you. And a question from Alison. Has the lending criteria for multiple portfolios changed? Kevin?
Okay, I think we're talking here about building a buy-to-let portfolio here in Spain. There's a couple of crucial things to mention. Unlike building a buy-to-let portfolio in other countries, here in Spain, it is a lot more difficult. Why is that? Well, the first thing is that buy-to-let mortgages themselves don't exist here. And by a buy-to-let mortgage, what we mean is a mortgage where the bank, the lender, is actually basing whether they'll lend or not on the potential, well, the future rental income for that property. In the UK, for example, if you're going to buy a property and the bank knows that the rent would be 150% of the monthly mortgage payment, there are products where they will just approve those without looking too much into your income and debt profile outside of that actual purchase. Here in Spain, that type of product doesn't exist. So that's the first thing to point out. Also, in other countries, you can actually get interest-only mortgages, which, when you're trying to build a buy-to-let portfolio, will be an absolutely essential thing to do, especially you know, when you're going to the bank and you want to convince them that the rent for the property will actually, you know, more than cover the mortgage amount. interest-only mortgages don't exist in Spain, nor do buy-to-let mortgages. So there are two crucial things which mean that it's far more difficult to do that. But just in terms of the general thing, has the lending criteria changed? That question, no, because it's been the same all the way through.
Okay, great. Thank you, Kevin. And for our last question from Peter and Isaac, any comments on foreign purchase of apartments in Barcelona and Valencia? Bozena, if you'd like to answer that, please.
Hi, Peter. Hi, Isaac. We decided to merge your questions together because it's the same question you're just asking about two different cities. So the demand for properties in Valencia and Barcelona obviously gone down a little bit due to traveling restriction. However, there are many owners that for some personal reasons they need to sell the property. So there will be properties up for sale at the reduced cost. I will strongly advise you contact your agents, because many of the agents now do the virtual viewings, so you can see the property and you can get it at a discounted price.
Okay, great. Thank you, Bozena. Well, that's the end of the questions. We hope we've answered them all. If we haven't, you can answer a question now, or feel free to, after the webinar, when we follow up, you can ask your question now. Ask your question then. So we'll now start on the interactive session. And if you have got a question, the way to ask the question is to put yourself on unmute and raise your hand, or if you don't wish to be seen, I believe you can click on participants, and there's a button on there that says raise hand, and then we'll look at the question. So anybody to ask any questions, please? Okay, I'm just having a look. Just bear with me one moment. I'm just getting the questions up, people up on the screen, because there's quite a few. Okay, a question from Paul. Paul, if you'd like to ask a question.
Hi guys, thank you very much for the presentation. Can you hear me?
Yes, we can hear you fine. Thank you, Paul.
Okay,
go ahead.
Brilliant. So basically, the first question, I guess what presentation was actually directed towards the people who are not living in Spain, let's say, because I noticed what a deposit requirement was 30%. Yeah. So, and for residents, Spain residents, I guess it is still 20%, nothing changed. This is one of the questions. Okay. And another question is, do you think what required property tax will be reduced to stimulate the borrowing process due to COVID, as it is obviously regulated by the government, and it would stimulate probably new requests for mortgages? I'm just wondering about your opinion. Thanks.
I think I can answer that one. So in terms of the first point, you're quite right. For resident mortgages, the deposit would normally be 20%, the minimum deposit, that is. So if you qualify for an 80% mortgage, which is the maximum for a fiscal resident, then you only have to put down 20%. It's quite interesting because I can remember back to the global financial crisis with regards to the tax on a property purchase. And I think it was in the space of about 6 months. This is in the Valencia region where I'm based. So what happened? The property tax at that stage was 7%. And in a bid to stimulate the property market, the government reduced, or the local government reduced it down to 40%. Sorry, to 4%. And it literally was just for a few months, and then they increased it again. But not only did they increase it didn't just increase it to 7%, but to 8%. And it was 8% for a very, very long time. And then, as we know, in Valencia and Catalonia regions, it's now 10%. So in terms of your question, will they reduce the ITP tax? I really don't think so. You know, we went through many, many years during the global financial crisis with it at 10% after they made those initial changes, and it's still 10% today. I don't think they're going to change it. One thing is that obviously they are going to be generating a lot less income from these property sales at the moment. I don't know really exactly whether that's going to make them change it or not, but I don't think so.
Okay, thank you. Paul, does that answer your questions? Okay. Paul, I assume that's answered. If not, again,
Yeah, I'm sorry, I was muted. I just wasn't
No
muted back
problem.
again. Yeah. So yeah, actually, thank you very much. It does answer my question. Thank you.
Okay, perfect. Thank you. We've got a question from Agatha would like to ask a question. Agatha, would you like to go ahead? If you can just wait one moment while Jonas puts you on mute, and please go ahead.
Yes, hello. I wanted to ask, because we have now a case where we have valuation, which was done just before COVID, 1st of March, but the things were put a little bit on hold. And I'm wondering if the banks are accepting valuation from 1st of March, and how long generally the valuations are valid. And in this case, if the banks will accept the valuation made before COVID started, before the emergency started.
Okay, Kevin, would you like to answer that?
Okay. Well, in Spain, for the mortgage process, the valuations are valid for 6 months. So if that valuation was done on the 1st of March, for example, then obviously that would be valid through to the 1st of September. COVID, the question of, would they accept a pre-COVID crisis valuation? I believe they would. In fact, I think we've had several examples thus far where they've accepted those valuations. We haven't seen, as I said earlier, to the answer to one of the other questions, we haven't seen any real drop in the valuation figures yet. None of us has a crystal ball. We don't know what's going to happen really to the property market. I don't personally think it's going to drop as much as many people think it will, if at all. And in fact, if that doesn't happen, then obviously we won't expect the valuation to drop either.
Okay, thank you. Agatha, does that answer your question? Okay, Agatha's on mute, so I'll assume.
Hello, now you can hear me? Yes.
Yes, we can. Did that answer your question?
It does answer. Thank you. I have one more question. Can I ask one more?
Of course, go ahead.
So how about rented properties? We have some properties which are being rented by the sellers, and the buyers are willing to buy with the tenant in it because they also want to buy as an investment. And I've heard that there are sometimes that the banks are not happy to give a mortgage while the property is rented.
Mm-hmm. It's a very good question. Basenda or Kevin, would you like to answer that?
I can answer that. Kevin, you can you can answer that.
Okay. You can have a turn in a second, Basenda. So basically, this is quite a good question. Here in Spain, the banks don't have a very positive view of properties that are rented out. And in fact, when you have a valuation done, the valuer has to confirm in the report the status of the property. Is it empty? Is it vacant? Is there somebody living there? Is the owner there when they go and do the valuation? Who shows them the property? And are they actually living there, or have they just shown up for the visit? If on that valuation report they have to state that there is a sitting tenant, it can actually have quite a dramatic effect on the valuation. Where a property is being bought solely for investment purposes, obviously the bank will be aware of that, and that can have a slightly different effect in terms of mortgage. But if it's somebody that's actually buying that property to be used for their own personal use, then it will affect the valuation, and the banks don't like it. They don't like properties being bought for investment purposes. I wouldn't say in general. I would just say they're not as flexible about those sorts of things as they are in other countries.
Okay, thank you. Agatha, I'll assume that question's been answered. Thank you. And question, Graham Fletcher. Graham, you'd like to ask a question? Are you on? Yeah. Okay.
Hi.
Hi, Graham.
I asked a question earlier about mortgages for retirees with pensions, etc. Just a supplement to that, and it is that I am above retirement age, and fortunately I married a child bride, and she's not yet retired. that'll happen in a couple of years' time. So if she's still working and got an employment income, in addition to that, I have a part-time job, which is self-employment. Can those things be taken into account when calculating the mortgage that's available to me, albeit that in 2 years' time, 2-3 years' time, something like that will be permanently retired?
I can answer that, Graham. Your current income will be taken into account, but the banks will ask you for the pension statement.
Sorry, one second. You've gone very quiet.
Can you hear me now?
No, and I'm on full volume. Okay. We'll have to persevere. I've got my ear next to the speaker.
Or are you okay?
Yes, sorry, I was checking whether the microphone was off, but no. So yes, the banks will look at your current situation, but they will also look at your pension income. So once you stop working, whether you will be able to support the mortgage. So the calculations will be done on your pensionable income. Let's say, just for instance, if the term of the mortgage is for 10 years, and during those 10 years, you will continue working only for 2 years, and after 2 years, you will become retired. They will mainly look at your retirement income.
Okay, that clarifies that. Thank you.
Okay, is that covered, Graham?
Yeah, thank you.
Okay, thank you. We've got a question here, a private question. A good question. What are the conditions of loans for investors? For example, if a borrower owns 1 million in securities, bonds, etc., how does a bank calculate the loan size and percentage? Kevin, if you'd like to answer that.
I'm not sure if I fully understand the question, but are we talking? We could be talking about somebody who has a significant amount of money invested, and they want to use perhaps the dividend and interest on those investments as the income for the assessment. It's worth pointing out here that most of the high street banks will not lend to somebody whose only income is from investments, dividends, interest. They treat it as if the person could literally gamble that money away at the casino after they buy the property. So it's not a very flexible system. However, we do work with a number of private banks who are a bit more flexible. I have done a mortgage recently, actually, with one of the high street banks. It was an American client, actually, that had several $1 million in investments. And they were initially going to be a cash buyer, but they decided that they would buy with a mortgage because they'd lost a lot of money on their stocks due to the COVID crisis. They didn't need to borrow the maximum, which was fortunate because we wouldn't have been able to find a bank to lend the maximum to them. But we were able to organise a mortgage of 30%. They had to provide proof of where the funds were invested, what the declared income from those stocks were in the last 3 years, and the bank was willing to lend to them. Now, obviously, the bank takes the property as a guarantee, but they always in Spain will look at the debt and income levels as well. So those clients were able to get a mortgage, but we did get 4 declines from other high street lenders.
Okay, thank you, Kevin. And we've got a question here. If we wanted to buy a flat of a family member, would we need a mortgage or a loan? Would it work the same way with the fees? Another one that came, okay, so if you want to buy a flat from a family member, how does it work? Is it a different process? Are the fees different, or is it the same? Susanna, if you'd like to answer that.
The cost is exactly the same. So you will still have the property tax because you're transferring the ownership from one person to another one. So you will still have the Spanish taxes to pay. If you're getting a mortgage, you will have the mortgage costs. You will have to pay the valuation. So it will be exactly the same. The only thing you can do, you can negotiate the price with your family member.
Okay, thank you, Bazena. And any more questions, please? One question from one of our advisors is sitting in the audience, and it's a very good question. And the reason we're going to ask it is because we're asked it a lot of times by our clients. And Joyce, if you want to raise that question that a lot of clients are asking you all the time, so I'm sure it'll be relevant to our audience here.
You get asked quite.
Sorry, Joyce, can you start again? Sorry, you were muted then.
Sorry, thank you. Thank you. Yes. Hi, Catherine. Yes, great presentation, by the way, and wonderful questions by our participants. But there is one question that does come to mind that we do get often asked from our inquiries, and that is about equity release. So specifically, as an example, for our clients that already own property here in Spain, and they do want to buy a second property, can they release equity from that first property?
Okay, great. Bazena or Kevin, if you'd like to answer that.
Okay. I'll answer. This is a very valid question, often asked, no doubt because people in their home countries find it very easy to release equity from their properties. Lenders in foreign countries, I say foreign countries, outside Spain, are much more flexible on these things. Equity release in Spain, it was available fairly easily going back quite a few years when Lloyds Bank were operating here. Possibly being a British bank, they were more open to the concept of equity release. But when they dropped out of the market, we found it very, very difficult. We did hear at one point one of the lenders was willing to do equity release, so we sent them a few applications, and it became apparent that it was very, very restrictive. People were able to get equity release if they were going to renovate the actual property from which they were going to release the funds, but the bank wanted so much control over what was happening with the funds. They wanted to be able to pay the builders directly. They wanted to make sure that the relevant licenses were secured, and many of the clients just wanted to do kind of cosmetic work inside the property, which here in Spain, unlike in other countries, you do need a license for that, and then you have to go through the Spanish bureaucratic system to get those licenses. So we did organise a couple of equity release mortgages back in quite a few years ago, and people were actually doing extensions and things like that, but it is very, very difficult. I wouldn't say to anybody it's easy. In fact, we often say, it's not possible. We did speak to a bank last week, so as recently as last week, and they have said that they would be willing to look at this. But really, it's only for clients with very, very strong profiles, and you cannot, under any circumstances, get an equity release and you'd be able to use those funds in any way you wish. You would usually have to buy another property in Spain, and again, the bank would want to be in control of those funds, so they would expect to be paying the deposits via their accounts to the sellers of the new properties in the way, so you paying your deposit or any other payments for that purchase, or to use to renovate a new property or to buy a new property. So yeah, it is potentially possible, but it's not something we promote because we know how difficult it is.
Okay, thank you, Kevin. And I believe we have another Kevin in the audience who has a question, unless I've misunderstood.
Hello, can you hear me?
Hi, yes we can. Hi Kevin, and welcome.
Hello. Hi.
Yes.
My question is regarding joint applications. I'm 61 and Bazena said that mortgages have to be repaid by the age of 75, so therefore I'd only have 14 years repayment. If I do a joint application, so there'd be myself and my wife, but then if my son also becomes an applicant to the mortgage, obviously he's a lot younger, is it possible to extend the mortgage term because my son is, say, for example, 30?
Bazena, would you like to answer that?
Good question. The banks usually look at it. They look at the older applicants. So if you are on that application, the mortgage will have to be repaid by the age of 75. They're not going to take into account that your son can have a mortgage for 25 years. Saying that there is a bank that is still offering mortgages up to the age of 80. They have a strict lending criteria, but it's worth checking whether that will help you.
I hope as well many of your questions were answered. And if you didn't see the presentation made by Bożena yet, here I will attach the link. Below, I will also attach the link to contact Mortgage Direct. Thank you for watching.